Vincenzo's Gold Crypto Investing, and then we got XRP up here as we start along on this very cold night, on this approaching mid-January, actually mid-January now, the 10th of January, in the midwinter in the greater Bloomington metropolitan area in central Illinois. No snow cover on the ground, got wiped out by some freezing rain that went to rain, and then an Arctic front came in, but we're sitting in the mid-teens on our way to another very chilly night tonight, and maybe looking at some accumulating snow as we work our way in on to the weekend, right? Friday night, Saturday, maybe a little bit Thursday, right? So we'll keep an eye on that. But you can see what we got going on here is the XRP, and you can see this green ring right here. We're going to make this a little bit bigger. We're going to make this number 2 and semi brighter. You can see that's acting as our overhead resistance right now. Right, see that? If we take our, get that off, industry exclusive pointer tool, you can see multiple times the green rings are support and resistance, resistance, support, right? Then it support, support, then it flushes and it finds support, support, resistance. But every time on a pump, you can use these green rings to find the resistance spot, right? And my longtime followers know this is a different ring setup. I have the other rings in the background, hidden in the background, because I think this is a better track that we're on now as the pattern continues to play out. And the current rings that are the most important, I believe, are these two right here. And you can see resistance, 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 and then finally a breakout, and look right where it gets resistance, and then ultimate double top resistance, resistance. Then it flash crashes, comes down on support, right? And then you can see where we're hitting resistance. So right now you got overhead resistance at $1.18, which is where it's been before I clean the chart up, right? And then you got lower support at 68 cents. And you can see now, it looks like we got a little bit of a pattern forming up here, right? So if we get rid of that, we can take our industry exclusive line tools, right? Or perching tools, and you can see you got some overhead resistance there. See what I'm trying to show you here? Got overhead resistance right there. If we make that a beautiful blue color, you can see we got what looks to be some underneath support forming down here. And that looks to be a symmetrical triangle. Not a very good symmetrical triangle, but at least since we're in the weekly pattern. So this is since April, when you started pumping and got up to your peak in April of 2021. So this is a fairly long symmetrical triangle, and I think this is exactly what you're in, right? And these are neutral continuation patterns, and you can see it's once, twice, 3 times wicked off of the lower support, which is right here. We'll make that slightly bigger, which is right there. Also just so happens to be where the 200-day moving average is. And these are neutral continuation patterns, and often people like to say that if the pattern was bullish going into it, a neutral continuation pattern as a symmetrical triangle it is, where you have descending lower highs, resistance, second resistance and lower, third resistance and lower high, and uptrending lower support, support, support but higher, support but higher, support but higher, right? Uptrending. They like to say if the pattern was bullish going into it, like this is right here, right? We bottomed out down here back in the 9th of March of 2020, and then we had a massive bull run up to the 12th of April of 2021 and had a massive rally, right? So you would say this would be in a bullish consolidation, slightly 6 out of 10 chance to break up, because this symmetrical triangle is a neutral continuation pattern. But since it's forming in an uptrend, that should give it a slight higher chance to break up than to break down. But I still think this is going to ultimately break down. But you can see this is a long-term pattern, and we still got till about April of 2022, so a few more months to break this pattern. But if you're going to play how the pattern's been going, this is a great buy zone off the green ring at 68 cents, right? And your uptrending support on your symmetrical triangle to play the bounce if you're going to play the rings, and to play your support, and to play it right up into here as a safe play, and then a secondary play up to here, right? So if you're going to play a pattern that is held firm a few times, in almost the last year, oops, let's get that off. In almost the last year, right, you had your lower or upper resistance at $1.69, right? And then it crashed, and then you could have bought it at 56 cents ish, and then it pumped all the way up to $1.36. Then it full lateral flushed all the way to 68 cents, and then it came all the way back up to $1.03, right? So if you want to think this is going to have one last push up, you can make a play to buy it here on support between the green ring and your uptrending blue line, and play it to come back up into here at $1.03. And with our industry exclusive measuring tool, this would be a 44% pump if that was to play out, right? But the risk is always, if you breach the 200-day in this green ring, your next major area of support is unfortunately all the way down here on the top part of the get my shit together zone, or aka last line of defense to the shithouse at 48 cents, and that would be a catastrophic flush from trying to buy support at 69 cents to 48 cents. That's a catastrophic, probably a 33% flush from your support, almost 39.69% flush, right? So that's what you got going on here. See how this interacts there, but a targeted move would be on a break up, would be from the top, from the bottom to the top to the point of a breakout, and say it broke out towards the end. That would give you a target of a fabulous, glowing, all jabroni enticing double top at $1.69, right? Which is possible. That would make some sense right there. And then you would probably have a big fall after that, but that is possible. This would be your upside target on a break up from a nearly 1 year long consolidation pattern of a symmetrical triangle where you've had descending lower support, $1.69, $1.37, and then the last one, 73 cents, uptrending support, 56, 68, and now 74. So we're going to see what happens there, but you say, well, what would be the price on a pattern breakdown? Well, the pattern breakdown would be just the opposite from the top to the bottom, but it's going to come out all funky because of the way the price is set up on my chart. So you would just do a measure, and that would be a 68% flush, and a 68% flush from the point of a breakout would bring you all the way down to the, and this makes sense too, this would bring you all the way down to this middle white support zone right here that I have. And that brings you also to the green ring and the bottom of the white support zone, which is the volume indicator for the whole history of this coin. And if you're above it, you should bounce. If you're below it, you're extremely bearish. And that makes sense that that would be a pattern breakdown, targeted move all the way down here at 25 cents. So that's quite the spread. If you break up, you're coming up to $2.03, not $2.03, about $1.92 on a break up, and on a breakdown 23 cents, and on a mid ground, bring this over here, and on a mid pattern pump to upper resistance on the pattern, $1.04, right? So that's what you're looking forward to. Current support 68. If you breach that, you're coming to 48. If you hold the 68, you can pump up to $1.04, right? And that would be a good sell. So like, subscribe, and share to Vincenzo's Go Crypto Investing. Peace and love on our march to 1,000 subscribers.